Hi, everyone. Happy Monday. Thank you guys so much for joining us. We're going to have a great conversation today, all around clearly what you see the title of this Twitter Spaces, but really diving deep into what could happen, maybe perhaps what should happen as the US considers new regulatory frameworks from stablecoins to market structure to consumer protections, right? That impacts every single one of us listening in right now. We are really planning to highlight how the US can strike a balance between responsible innovation, global leadership, and of course, protecting us everyday consumers in an increasingly digital global economy. So, once again, thank you guys so much for joining in this conversation. And actually, Congressman Carter, I'd love to start with you because when we zoom out and look globally, how would you assess where the US truly stands today on digital assets and stablecoin infrastructure when you think about comparing to other countries or continents like Europe, like Asia, and emerging markets?
Well, first of all, two things. First of all, thank you for having me. I appreciate the opportunity to engage with you. And secondly, this is something that's very important for us in the United States. I feel like we're in a good spot, but we need to remain in a good spot and we need to be the leader in this. We can ill afford to let other countries take the lead in this because if we do, we're going to get behind and we don't want that to happen. We want to I think that everyone in Congress, the general sense that I feel and that I sense, I should say, is that we understand we need to come up with some kind of regulatory clarity. We need to make sure that that our rules, our regulations, our laws that they give people confidence that we here in the United States, we're going to be the leader in this area, and we're going to be the ones who set the standards and set the stage for what happens in this particular sector. And I think that's very important. There are many of us in Congress who need more education in this area, but at the same time, we recognize the importance of it and recognize the importance of not just passing legislation and regulations to be passing regulations and legislation, but instead to, as I say, creating regulatory clarity so that we know what we're doing here and that people will have confidence that the U.S. is the leader in this area.
Yeah, I completely agree that the US is going to be a leader in this area. And I want to bring Marshall into this, especially kind of piggybacking something off of something that you just said around regulatory clarity. Marshall, when you think about entrepreneurs and entrepreneurship in general, especially that broader ecosystem, many times entrepreneurs hear that regulation slows innovations, but others argue that it provides a regulatory clarity that actually unlocks it, which is something that the congressman was just kind of alluding to around regulatory clarity. Where is the US, in your opinion, striking the right balance today? And where do you think it might be falling a little short?
Thank you, Kori, and I want to say thank you, Congressman Carter and Kori, and everyone here today for having me, and really excited to have this discussion today. In regards to what you just said, I believe that the U.S. has really positioned itself this year to be the global leader in cryptocurrency and blockchain. We have Silicon Valley. We have a lot of companies here. Cryptocurrency is a global phenomenon, but you find a lot of the innovation happening in Silicon Valley and around the United States. And I believe that through this process of clearly defining the rules and regulations and different types of digital assets and assigned primary regulators, it gives the crypto space the ability to grow. People in the past will say, and in general can say, regulation can stifle innovation. What they're not getting is that regulation done wrong stifles innovation. Regulation done right will give the clarity for companies to move forward. And that really has been the problem for innovators like myself and for people that have been in this space for a long time as we've built our startups in the blockchain world. There was a lot of uncertainty. So you had to take a lot of risk and you had to have very good lawyers and you had to have a good understanding of a balance of the technology and the public policy as you deploy these novel innovations and solutions, and you have to innovate as the FDIC has said, innovate responsibly. The FDIC, is the bank regulator around insurance for the banks and protections. So in the same way, crypto really has to innovate responsibly. We have to build new systems that can empower people, but we have to do it the right way. And doing it the right way it's critical to know the rules of the road. If you don't know the rules of the road, if there are no rules that are written, then it really scares away large tech companies, it scares away banks, it scares away everyone that could be a part of this innovation because it's not clearly defined. And this year, with the coming market structure bill, the Genius Act, the Clarity Act, we're finally getting that clarity, pun intended, that we need. And I think it's very good. There's some things that we're caught up on, right? Like rewards over stable coins and different things that a bank lobby may say, well, hey, wait a second, and we should discuss those things. But I think in general, we've got the right recipe going into this. So
I think you're on mute, Kori.
Oh, sorry. I was over here talking, Marshall, and I was still on mute. Sorry about that, everyone. I was saying thank you for sharing that. I actually want to come back to what you were saying about stable coins in a second, but picking up on something that you said midway through about making how things are interconnected. And when I think about it, especially from a media perspective and how media has such power to influence perception, and then that perception ultimately influences policy. And as we know, policy influences the decision making and the flow of capital that impacts all of the things that we are talking about today. Specifically, Marshall, when you brought up stable coins, this is something that I feel is often framed as a crypto product, but increasingly they're being positioned as financial infrastructure. What does that distinction change, and how can policymakers or perhaps the public, how can or how should we be thinking about them?
yeah, I think it's a great question. And one of the questions that's come up in the market structure bill is, should we treat DeFi platforms as money service businesses, as money as licensed financial agents? And there's been a lot of pushback on that because a lot of people say, well, hey, these innovators are technologists, but they don't come from the TradFi world. And if we block them access to just simply build smart contracts and things like that, then we're kind of we're moving back. We're losing on the world stage. We're losing against China. We're losing against the rest of the world in terms of this innovation, and we think it should happen here. So I think one of the big things that people have gotten caught up on is that discussion, and I think a big part of that is the digital identity aspect. And banks and credit unions and financial institutions integrating this technology in a responsible way, that innovators they can work with those technologies but be exempt from some of those more onerous situations when it comes to operating like a bank. A small startup is not going to operate like a bank, but we can use digital identity. We can integrate banks and credit unions and financial institutions to be the on ramp and the off ramp through stable coins. Stablecoins, I believe, will be treated and are going to be treated like a regulated financial product. And so through that, we can use the digital identity and in an opt-in manner. So a lot of people have said, oh, I don't like this idea about digital identity. Realize that it's opt-in, right? So you don't have to use it necessarily to use a blockchain. A blockchain, by definition, is free and open source software. Anybody can access it. Anybody can access the network from anywhere in the world. But through digital identity, platforms can comply to the Bank Secrecy Act and they can comply to regulations. So in the future, what you're going to see are these kind of opt-in platforms that automate a lot of that compliance and make it very simple. And I believe that a lot of the regulatory aspects will start to fall more so on the banks and the money service businesses, and there will be kind of a delineation between smart contract developers, dApps, and those innovators, while they're working together hand in hand with credit unions, banks, financial institutions, and these technology layers like digital identity will not only help comply with the anti-money laundering statutes, but also are going to keep us safe. They're going to keep your grandmother safe, your brother safe. From losing crypto, you've heard these stories where somebody maybe, loses their keys or gets hacked. We're going to eliminate that. Not only has blockchain eliminated counterfeit currency, but now we're going to eliminate the issues around theft of currency, and we're going to really make it fully traceable to the point that we can stop a fraudulent payment real time, and that protects regular consumers and businesses. And so I think it's going to be the internet era for money, like what we saw happen 30 years ago with the dawn of the internet. Now everything is online. Business moves 1,000 times faster. So money over the next few years will go through this rapid transformation and acceleration where it's moving 1,000 times faster and things are more secure. And if I want to send a bank wire, it's no longer it'll arrive the next day or before cutoff time. It'll arrive instantly, globally, anywhere in the world. And when I type in that information for that bank wire, I'm no longer typing accounting and routing number and SEPA and your name. I'm typing your @username, your handle, and seeing your verified digital identity pop up. So I think that that's really very exciting. And also when it comes to digital identity, we're going to move past this antiquated idea of you have your SSN and your password is your username, and everybody's data gets compromised. In the future, you'll have your username like at Kori, at Marshall, at Buddy. And when somebody goes to verify your credit score, goes to verify your information, you're going to cryptographically sign it with your private key that no one has.
Um, this is all very intriguing. And I think, Marshall, holistically, what you're saying is that should be able to build up more trust in the way that these transactions are taking place, which at the root of kind of the issue sometimes with the public is the trust feature, as you referenced, when the internet came online and from where it started to where it is today. And this is where Congress, I think, plays a huge role in that. And Congressman Carter, specifically because you guys hold so much of the public trust, right? And it's one of the biggest barriers to adoption for anything, especially as we dive deeper and deeper into digital assets. And I'd love to know from your perspective, what does responsible innovation actually look like in practice and not in theory from where you sit?
Well, I'm glad you brought this up, and I'm glad Marshall brought this up, particularly when he alluded to the internet, because, and guys, y'all need to understand, Congress oftentimes is hesitant to move on things like this because we don't want to stifle innovation. There are things that we need to do with the internet that we haven't done, particularly with kids' online safety and things like that, because we're afraid that we're going to stifle innovation. And we've got to be, you need to understand that. My dad always said that when you don't do something, you're doing something. And that's kind of what Congress is like sometimes. We feel like let's we're afraid we're going to mess it up, so we're not going to do anything at all. Well, we're doing something. And and I think that's what we need to understand is that when I say we, Congress needs to understand is that we do need to offer this to the marketplace, that they want this. They want this kind of regulatory clarity. They want to, they want responsible innovation because that means that consumers will be able to trust this system. And that's going to be very important. But I'm just trying to articulate the sense of Congress here in this in the way that sometimes not only are we afraid to do something because we're afraid we're going to stifle innovation, as I said before, but also we have a big tendency here in Congress to let perfect stand in the way of very good. There are some things that we could do to really improve things that would make it very good, but just like I want to use an example, the Clarity Act, we passed that out of the House, but the Senate now is they're nitpicking it, in my opinion, and trying to break it up. And I'm really concerned about what's going to come back to us when it does come back to us. I'm proud of the fact we got the Genius Act passed. I think that was good, signed into law. But now I'm even hearing that they might want to pull that back and tweak some things in that, which I'm not opposed to, but at the same time, it does concern me.
There's a lot that you guys have to be on top of, Congressman Carter. Like I said, the public trust is at the forefront, and the protection that needs to go into place, which at the end of the day, you guys hold the keys to that when it comes to the regulation and digital assets. They are increasingly intersecting with every part of our lives, with the supply chains, identity, national security, all of those sort of things. So, how should people listening in right now, everyday consumers, be thinking about blockchain infrastructure in terms of resilience and not necessarily speculation? Oh, go ahead, Congressman.
Well, Marshall, you may have an opinion on this, but I really do. I really think that the general public's looking to us to do this. And another thing that I want to mention, and again, I keep bringing my experiences with the internet because I serve on the Energy and Commerce Committee and Communication and Technology Subcommittee, and the internet's under our jurisdiction. And if we don't do it at a federal level, if we don't address some of these things at a federal level, they're going to be addressed at the state level. And then all of a sudden, you're going to have a collage of different rules and regulations, and we can ill afford to let that happen. Not only that, but if Europe implements, rules and regulations, that's going to set the tone, if you will, for what we are trying to do over here in America as well. That's why we need to be the leader. We need to be the leader at the federal level. We need to get some of this legislation done. We need to offer more clarity, regulatory clarity. We need to have responsible innovation. There's no question about that, so that the rules that consumers can trust, they can understand. We need to address fraud. We need to address all of these issues. There's a lot to unpeel here in this onion.
Yes, there definitely is. And Marshall, I want to bring you back in to this conversation because we often talk about public-private collaboration, which we know is much easier said than done. But as it relates to this topic specifically, what does effective collaboration between lawmakers and innovators actually look like when it's working effectively?
Yeah, I just want to take a moment as well to thank Congressman Carter and everyone in the Congress, the Senate, the executive, President Trump's administration for putting the focus on getting this right. Because I just want to take a second to recognize that, because it is so important. It is the future of our country. Our businesses run on the financial system. The backbone of America, small business, runs on this financial system, and if we can accelerate it, we can bring our country forward, on the world stage. And we are already the global leader with the United States dollar, but it's time to do the big technology upgrade and embracing it and running forward, which I guess will segue me into to the answer to your question. Will happen with that merging the interests of those two in terms of the private sector has had to self-regulate for years, in a sense. We've had to kind of set standards internally and adapt to those standards. And over time, we've as the United States government has begun to be very proactive and embrace crypto, we have come to Congress, we have come to the Senate, and we give these speeches and we act as kind of a sounding board. How can we do that? And realistically, the best way to do it is for the leaders in the crypto space, people like myself, but other leaders. You have like Brian Armstrong with Coinbase and Jesse Powell with Kraken. They stand up and they say what's important for innovation and what's important for consumer protection. And it's important that we acknowledge those things. And to Congressman Carter's point, it doesn't have to be perfect. We want to get it right, but if we spend so much time splitting every hair, we won't get anything done, right? And I think that that's what the congressman is alluding to here, is that we need to get the clear federal definitions. And I really like what he said there, because that was my impetus 5 years ago, well, 6 years ago now, with the Cryptocurrency Act 2020. It was 3 pages long, and it kind of got shot down during the middle of COVID. But I do believe in having the federal definitions very clear, the assigned prudential and primary regulators very clear, and those policies very clear. And there will be plenty of time to refine things over time. And that can happen through this feedback loop of the private sector. And the private sector needs to tell the government, hey, here's how we're protecting grandma. Here's how we're protecting you, how we're protecting access to your bank account, to your crypto wallets. Here are the best practices. And this is the right way to do things, right? There's a right way and a wrong way. And I think that by being very concise right now at the federal level, we set a precedent for the states. The states can adapt. If we have 50 different laws on the books for every state boundary that you cross, it is going to kill the industry 100%. So we need to set these at the federal level, and they need to be the basic common sense stuff. And a lot of that comes from the innovators like myself and innovators in the crypto space that will say, hey, digital ID, opt-in only, it's a great way to prevent fraud across blockchains. Ability to communicate real time. So when one crypto exchange is hacked or has some sort of issue, everybody knows and all the wallets are frozen automatically. Imagine if we had that in the banking system. When something fraudulent happens and one fraudster tries to move from one bank to the other, imagine if all of the accounts that he's ever sent to or interacted with would be, flagged immediately. You could save a lot of people's time and money and headache. And when you look at like the work like the CFPB does or other regulators, we could make it easier for them, right? We could make it so much easier. And at the same time, by doing that, we open up the opportunities for everyone, not just young people, but at every age range. We're opening up DeFi. And one thing that I said a while back was I believe that when it comes to young people, especially that are starting to build their nest egg, starting to save, regulated DeFi is going to be the big opportunity zone. The areas of crypto that were unregulated, that threw caution to the wind, those were problematic, and that was kind of a previous era. But this new era is going to be focused on digital identity, anti-money laundering protections, very strong cybersecurity programs to prevent hacks and exploits, and also the ability to retroactively unwind things. So this idea that everything has to be completely final in every sense of the term, maybe it doesn't. We can use DAOs or decentralized autonomous organizations to be that balance between centralization and decentralization. We don't want anything too highly centralized, but at the same time, we want systems that are adaptive and flexible. And I believe that there's going to be that merge between the traditional finance world of banking, credit unions, and blockchain and fintech. And I think that a lot of these things are going to cross-pollinate, where we have very strong anti-money laundering controls. They're going to start to come more on chain. And where we have frictionless finance and free and openless and permissionless systems, that's going to start to come into banking. So I'm very excited for that. And I think that that is really the key here, is for the innovators in our space to get loud and to speak up about the things that we need clear regulation and definitions on, so we don't have to spend so much money with our lawyers fighting over every little thing. And at the same time, when you look at how the banking lobby is pushing back on this stablecoin rewards thing, this is, instead of having I see some innovators doing this headbutting over this issue. Oh, well, we're not going to support you. Well, maybe let's talk about all the different ways that this can be done. And let's talk about the ways that this benefits banking. And then I think the lobby will change. So it's really about the feedback. And also as well, for the traditional finance world, when they start to get in and use these applications themselves, it starts to click, and they start to understand, oh, this is how it benefits my credit union. This is how it benefits my bank. We, in the past, would see money coming out of the credit unions and coming out of the banks, and they're concerned about that because that hurts their bottom line in terms of their business of lending. You have to have capital to lend. So why not have stable coins be built at the business and credit union level? So instead of the money coming out of the bank and going somewhere else, potentially overseas even, have it stay inside the credit union, have it stay inside the bank. Now it's growing the assets under management while growing the consumer protections and the trust and safety. In the future, if you have $1 million of cryptocurrency, you made it. You've saved up, you've compounded your interest. Now you have $1 million. You want to keep it inside the bank. You don't want to keep it under your mattress. You don't want to keep it on even a multi-sig setup between hardware wallets. Ultimately, the bank is going to be the best place to keep it. Now, of course, you want good hardware, good tech as well, but this is where we're going. We're going into a world where crypto is money and will be regulated as such.
Marshall, I love how optimistic you are about the future and where things are going, which brings me to my final question for both you and Congressman Carter here. Staying on the optimistic outlook, when we continue to look the next 11 months down the road for 2026, what is the single most important decision, or perhaps non decision, the US has to get right if it wants to remain globally competitive in the digital asset and financial innovation space? Congressman, I'll go ahead and let you take that first.
Well, the first thing I want to say, I want to really emphasize what Marshall said about the public-private relationship, because we are looking for the public sector to help us with this. Don't count on Congress to come up with all the answers, please. We do need best practices. We do need to understand exactly what's going on in that area, because it's extremely important. If you're a college football fan, they come to us and they want us to straighten out name, image, and likeness. And we're kind of throwing our hands up and, what do you want us to do? But we can ill afford to let the same thing happen in this sector that has happened with NIL. And that is, they got the Wild Wild West now. That's not what needs to happen. That's why you got to have some kind of federal regulation, some kind of federal outline, if you will, to guard against that. And I appreciate the fact that you're willing to work with the banks and the credit unions. I'll be quite honest with you. I have a lot of the banks, a lot of the credit unions come into our office. They're scared. This is an area where they're uncertain of what's going to happen here, and are they going to be put out of business? But I think working together, we can make sure that doesn't happen, and that they can benefit everyone. So I guess what I'm trying to say is that, it's like a Billy Joel song. Get it right the first time, because that's the main thing. Get it right the next time, that's not the same thing. But we do need to do something, but we can't just do something to be doing something. We need to do the right things. And I believe we can do that if we have the buy-in from the private sector and the help from the private sector. Congress does want to get this right. We do want this to work. We understand how important it is on a global scale.
I'm glad that Congress definitely understands how important this is, because it's going to impact and touch everyone's life in one way or another. And Marshall, I'll definitely let you have the last word here in terms of looking ahead to 2026 and, what you feel we need to get right throughout the rest of this year.
Yeah. So, it goes back to that bill I worked on in 2020, the Cryptocurrency Act. We need the very clear definition of the different types of digital assets. I believe there are three. You've got currency, stable coins. You've got commodity, that's like Bitcoin or XPR or Ethereum or Doge. You've got securities, that could be like a tokenized stock, right? Like a Tesla stock on the blockchain or something like that. And we need to have very clear rules of the road of those assigned regulators and how those work. And then when it comes to money transmission, we need to translate the BSA for how that works for the blockchain in a way that's innovator friendly, that welcomes innovators, but doesn't allow. We're not allowing anything to happen in terms of it's a free for all, but we're going to innovate responsibly. We're going to do things the right way. So I think that on top of those things I mentioned in terms of the different types of clarifications and assets and the regulators, I think also that it's important what Congressman Carter said, that we get it right. It doesn't have to be perfect, but we have to get it right, and we have to make small building blocks. So we start the foundation on the Market Infrastructure Bill, the Clarity Act, and the Genius Act. And we need to assure the banks and assure the credit unions that this is also about you guys. This is about protecting and growing our financial system, and not the opposite. And we're going to do it through responsible innovation. We're going to do this the right way. We don't want the capital to fly out of the banks and to have a banking crisis. We want capital to fly into the banks and to grow the stable coins by the banks. My big prediction, and what I've been saying for years, is that there won't be just one stable coin, that I believe that every credit union and bank will have their own stable coins, and those will interact in baskets of smart contracts with digital identity. And eventually, when it comes to other international currencies like euro, for example, or Japanese yen, the efficiency of the foreign exchange rate is going to become better than you've ever seen it before, right? And I think that that is really going to, again, place the United States at the center of innovation for blockchain technology. We already are. It's really just ours to lose at this point if we don't get it right. And my final thought on this is the way that we don't get it right is that we fight over it, that everybody fights over it, that Republicans and Democrats and everybody fights over it, and privacy advocates fight with digital identity advocates. No, we're all Americans, and we're moving towards this idea of accelerating finance and giving opportunity for everyone. So the way that we make it is we come together on the things that we do want, and we assure our financial institutions we want to see you guys grow, and here are the tools how to do it.
All right, well, there we have it. I can't thank you guys both enough for sharing all of these great insights about. And I think this is just a very timely conversation, especially as we're still at the start of the year. So once again, thank you, Congressman Carter, and of course, Marshall Hayner from Metallicus for putting this on. And you guys see them right at the top of your screen, so you know where you can follow them right here on X. And thank you all so much for joining us.
Thank you again, Kori, and thank you, Congressman. Thank you, everyone here.
Thank y'all. I appreciate it.